Gold has seen a stall in price growth since the fall, but what about the other yellow metal? What can we expect in 2020 from uranium? Joining me today is Lobo Tiggre of the Independent Speculator. He is also a Kitco contributor. Lobo, so good to see you. Welcome back to the show.
Happy to be on with you, as always, Daniel.
Yeah, happy to have brought you on for our Outlook 2020 here. And I wanted to get your thoughts, since you write so much on the topic, about uranium prices, which have seen lukewarm performance all year. Are we looking at oversupply or not enough demand for nuclear energy here?
Well, a couple things. One is there's this whole Section 232/U.S. nuclear fuel working group question overhanging the industry. And by the time your viewers see this in the Outlook series, that may be news making headlines. So
right.
We can talk about the sector, we can talk about the fundamentals, which is how I usually view things. But we just should have that caveat in your viewer's mind that there could be something rocking the boat at the time that they're watching this. And that's significant in the sense that it could be a potential tailwind. But ultimately, I think it's not a fundamental. As much as that's been in the headlines, and uranium bugs are waiting on pins and needles to see whether President Trump is going to support U.S. uranium producers. At the end of the day, it's really about supply and demand here. And uranium cannot be replaced. Nuclear power can't simply be replaced, not overnight. It's going to take decades for that to happen. And as you know, and I know, the stuff can't be mined at current prices. So this really is, in my view, one of those classic when, not if questions. And despite what you said, uranium has had this sort of strange, lackluster performance this year. But I actually do think that that's got a lot to do with the Section 232 kerfuffle. Once that introduced a question mark into U.S. buyers' minds, I think that prevented a lot of buyers from coming to the table with miners to set long-term contracts. Well, so I'm almost done. So the quick version there is there could be a boost to U.S. uranium producers, and that could provide a tailwind for the stocks with U.S. deposits. But ultimately, it doesn't matter. The uranium, they're going to have to contract it anyway, with or without that. And I think that contracting will start soon. And we've seen uranium prices start to inch up again recently, despite the lack of clarity from Donald Trump.
And do you have any feeling as to which direction the government would take here? Because what would prevent President Trump from moving forward with it? Is it really due to environmental factors, safety factors surrounding uranium?
No, I don't think that's it at all. It's not consistent with Trump's personality. But utilities have a lot of shareholders, and those people vote too. So I could see him not wanting to just, smack it to the utilities outright, and forcing them to buy from U.S. producers, which is more or less the original recommendation from the Department of Commerce. But I do think he will do something supportive. Otherwise, why would he even create the nuclear fuel working group in the first place? Right. If his answer was just going to be, it's not a problem, I'm not worried about our good friends in the Great White North supplying us with uranium, then he would have just said so last July. So I do think we'll support.
And I tend to agree with you on that, Lobo, because why wouldn't they want to ensure that there's sufficient uranium supply in the country and not having to rely on foreign partners here?
Well, it totally fits Trump's America First mentality. I'm not worried about Canada cutting off the supply of uranium in the United States, or our good friends down under either, which is where we get most of our uranium. And despite all the concerns about Kazakhstan and Russia and so on, really, I don't see this as a national security threat. I wouldn't have launched the Section 232 thing in the first place. But it is what it is, and it certainly fits with Trump's mentality to say, America should produce its own uranium.
But you're saying, despite the Sector 232, you're still bullish, whether it goes through or not?
Absolutely. There has been talk about, some improvements in the efficiency of the fuel rod producers that could help them supply utilities without having to go back to the mines for more primary supply. But I see this as a marginal adjustment. There's also been talk about Japan not restarting as many reactors as announced more recently. And that's also, it's a negative. I'm not going to try to pretend that's a positive. But none of this changes the fundamentals, and those are, you can't replace it. You can't just pour something else in the nuclear power plant, have it work. You can't just replace them. Even, Germany has announced that they're going to go non-nuclear, and South Korea wants to go non-nuclear. You make these announcements, but nothing happens right away because it's difficult to replace baseload power like this. So I'm really very bullish on the fundamentals. I mean, maybe down the road, the world will move away from nuclear energy, but that is years and years down the road. And the supply right now is not sufficient to meet current demand.
So Lobo, how do you play this market? Because it is a very opaque, still kind of underground market. So how do you expose yourself to it as an investor? What stocks do you like here?
Okay, well, as it happens, I've just put out, this is something I really never do. I don't give away free samples of my work. I work hard for it. I think I should be paid for what I do. But there's so much interest in this issue, and I found a way to sort of boil down my take on the most commonly asked about uranium companies on the market today. And I have that available now for a free download on my website. People can go to independentspeculator.com, and there's a link there in the free material right at the top of the homepage. You should see one of the boxes there with a link to 15 uranium companies today. So that's one answer to it. But I would say one size doesn't fit all. And it depends on the investor's risk tolerance and whether they're trying to swing for the bleachers on a big win or just get a little leverage to higher uranium prices. The safest way would be to go with an ETF type vehicle. You just benefit if uranium prices rise. Next up, you'd have the big producers like Cameco. Great company. Clearly, that stock will do very well if I'm right about what's going to happen to uranium. But if you want, these mythical 100-baggers, and this sector has produced that before. Everybody knows Paladin Energy was one of those ones that delivered on the order of a 100-bagger when uranium went from $7 a pound to $140 a pound. For that kind of exposure, you need to go down the food chain to the explorers. The earlier stage, the better. So it really depends on what the consumer here wants. And I'm happy to say I have a Consumer Reports type review of uranium companies available for free right now at independentspeculator.com.
Lobo, before I let you go, I just want to get your thoughts on gold and silver. Can the precious metals see a rebound in the months leading up to what some speculate to be a possible recession in 2020? How do you see it?
Well, two things. One is, as you and I speak, actually, the broader market indices are melting down and gold is having an up day. That just shows that a lot of the relationships you and I have spoken about before are still intact. The fear trade still drives people into safe haven assets, and that includes gold and silver. A broader look at the future for 2020. Do I see a safe world where investors have nothing to worry about? No. So I think that really puts a floor under gold and silver. And so I'm not worried about a lot of downside here, which is great, because that means if we do have the fear factor or, the Fed destroying the dollar, really lighting a fire under safe haven assets like gold and silver, then we have a lot of upside. And so that's really the long and the short of it is never say never. Of course, speculators can get hurt. But right now, this looks like an asymmetrical risk scenario to me, where there's not a whole lot of downside in the precious metals and potentially a great deal of upside. Could
gold take out its last highs in 2020? Could you see it move above 1900?
Yes. Think about $2,000 gold is this amazing, high number, but that's only about 30% above where we are now. That's not, a double or even a 50% gain to take out our nominal highs in 2011. So I absolutely see that in the cards.
Lobo Tiggre, thank you so much for joining us for the special Outlook series.
Thank you, Danielle.
Happy holidays to you and your family. And thank you for watching. We will have much more Outlook content for you, so be sure to stay tuned to Kitco.com.